the Fed has already done most of its work, and it continues to actually continue buying a lot of U.S. Treasuries, a lot of U.S.-backed mortgage bonds. So the overall supply of U.S. dollars does continue to increase, and I think that's going to be the major story that drives the U.S. dollar, not so much the election. So I actually still like selling the U.S. dollar, and I like to go long the Singapore dollar and the Chinese yuan as proxies against that. These two currencies are manufacturing currencies, and we have seen that tech manufacturing has been a little bit more stable, even though overall exports are weak. So I do think that given that China and Singapore have contained COVID relatively successfully, that these two currencies can continue to strengthen.
Okay. Max, just on the dollar, though, I do wonder, I mean, to what extent the uptick in U.S. yields we've been tracking, which in some ways is tied to what's going on with stimulus talks, too, in Washington, will impact the dollar going forward in terms of just how weak it could go? Will it put a limit on it because of what we're seeing in U.S. yields now?
I think that only matters for currencies when the dollar is a high yield currency against others. And I think if you compare currencies like the Chinese yuan, where actually yields higher, I don't think that U.S. yields will sell off enough to actually make the yield differential between the U.S. and China positive again. So it is a good point that you bring out. There will be a lot more treasury issuance as the fiscal deficit does continue to increase, and that could pair or slow some of the USD weakness. But the fact that you still get positive carry by going long currencies like the Chinese yuan means that overall, I don't think these fiscal increases or rise in U.S. yields actually slow the dollar that much. Okay,
so you've already mentioned that you like CNH, you like the Singapore dollar. I mean, what else looks attractive to you in Asia?
Well, I basically mostly like almost all of the low-yielding manufacturing currencies. So I also do like the Taiwan dollar and the Korean won. Overall, that's still a USD view. Where I'm a little bit more cautious is in Indonesia and India. And I think that these two currencies, although they are high-yielding currencies, because risk sentiment in the U.S. is still a little bit tentative based on the fact that fiscal stimulus is still uncertain, I don't think you're going to see a lot of inflows into India and Indonesia just yet at this point until you get some settlement on what's going on with fiscal stimulus. Also, on top of that, I think these two economies are struggling a little bit more with COVID relative to their low-yielding Asian peers. So I think that there is somewhat of a bifurcation between North Asia and South Asia right now.
Right. Do you have a view on the Indonesian rupee as well as the Indian rupee? Because those currencies seem to be a bit correlated given the underlying demographics there. And I particularly want to get your sense on the rupee specifically. Where do you think it's headed from here?
Sure. Well, as you point out, these two countries are very similar. They both have very young demographics. They're both high-growth economies, and they're both high-deficit economies. I'm a little bit more constructive on the rupiah relative to India because I think if you compare these two economies, the main difference is that the Reserve Bank of India is much more interventionist than Bank Indonesia is, and they've actually been accumulating a lot of U.S. dollar reserves. So I think that the RBI will basically limit any rupee appreciation to 74 per dollar, and at that level, they're going to start aggressively buying their U.S. dollars again. In Indonesia, because it's such a consensus long bond trade amongst real money asset managers, it's going to be the most sensitive to broader risk sentiment. But once risk sentiment does turn positive, I do think Bank Indonesia still wants a stronger rupiah. They've been saying that at most all their meetings this year. So I do think that if risk sentiment does turn positive, you should get the rupiah back down to 14,000 per US dollar. Whereas in India, I think, again, the RBI is just going to keep on limiting that rupee strength.